everyone, welcome. My name is Justin Jacobs. I'm the Houston correspondent here at the Financial Times. This session is called The Changing Energy Landscape, Reducing Emissions, Not Fuel Sources. And this is going to be a chat with Lorenzo Simonelli, who I'm sure most of you already know is the CEO and chairman of Baker Hughes, of course. And just a quick note here, we are pre-recording this session so that we won't have Q&A. So you guys will have to rely on me for that. But thank you, Lorenzo. Welcome.
Looking forward to the discussion today.
So let's jump right in, I think, with what's going on in the world, what we're seeing in the market right now. We're seeing very high prices for natural gas around the world, high oil prices, even high coal prices. It's kind of the return of fossil fuels. And of course, this is coming at the same time we're having discussions like this one today around the energy transition. So I think I wanted to hear from you, how does what we're seeing in the market around some of these fuel prices and supply shortages, how does this affect your view of the energy transition and kind of how this is going to play out going forward?
Well, look, at Baker Hughes, we're strong components of the energy transition. And as you mentioned, it's really not the fuel source, it's the emissions. And we think that over the course of the next decades, we really need to work towards net zero from an emissions standpoint. And that's what we're focused on. You're always going to see volatility in the marketplace, as you've seen before. But again, we're very much committed as an energy technology company, really to help the journey towards that net zero and 2050, and that's what we're focused on.
So, natural gas has been a big focus for you guys. And we're seeing spiking, natural gas prices. Does this, do you think that this, is this going to influence the future of that fuel in any way, do you think? I mean, does it show that we need to have more supply? Does it show that we need to move away from it faster? What's your guys' view on, on natural gas specifically?
Again, as you're going through the journey towards net zero, there is no actual journey without hydrocarbons. And of those hydrocarbons, we're strong believers that natural gas, LNG, plays a key role, not just as a transition, but really a destination fuel. And I think you've just got to look at the backdrop of the reduction in CO2 emissions within the United States as well as Europe. That's been really delivered through natural gas and also the evolution of LNG. So we actually see increased investment over the short and medium term, and we actually see demand continuing to be strong with regards to LNG. In fact, recently we took up our expected demand outlook of there needing to be 800 million tons of LNG capacity in place by 2030. So we're going through a positive wave of LNG projects, and also we see an increasing momentum as we go through the next few years. And again, we think natural gas is going to be a key element to it, and good conversations with our customers actually in making sure we're providing natural gas also with reduced emissions from a perspective of CCUS being applied to it as well.
It's very interesting that you're kind of bullish on the investment outlook, because obviously there's this big conversation around ESG investing and kind of some of the market signals that are out there around investment in new natural gas supply or some of these big LNG projects, which maybe struggled a little bit more to get financing over the last couple of years than maybe 10 years ago. So you're still confident that financing is there, the investment's going to be there to bring the supply onto the market that the world needs?
Yes, and it really comes to the fact that if you look at where energy is increasing in demand outlook, it's really Southeast Asia, it's India, and there's a natural opportunity for natural gas to be that provider, again, in the medium term, but also long term. If you look at some of the statistics, natural gas, LNG, still is a relatively small part of the energy mix where there's the growing population. We know that it can be affordable, sustainable. And I think what we're hearing from our customers is that with the increasing activity at the moment, there's more discussions around offtake agreements being 20 years in duration. And so there is an aspect of investment being available with that underpinning of 20-year offtake agreements. So again, we remain positive with the opportunity of natural gas and LNG. And as you know, Baker Hughes plays a key part in the liquefaction train. So, we look to it being a positive aspect for Baker Hughes going forward.
Mentioned, finding ways to reduce emissions from natural gas in terms of, securing its, role in the future energy mix. Do you think the industry's done enough on that front so far, or are there, particular areas where you think that the industry can improve?
There's more the industry can do, and I think when you look at current available technology, there's a huge opportunity to drive efficiency. And if you just looked at the oil and gas industry and you said we were to be 10% more efficient, you'd be actually able to reduce 500,000 tons of CO2. And that's 5% of the achievement towards the Paris Accord. And you look at it from a technology standpoint, you can see from the IEA study that already, 25% of the target can be achieved from readily available technologies that are here today. When you think about driving remote operations, digital approach of, again, reducing the footprint that we have in the field, also Flare IQ with regards to reducing methane and flaring that's taking place, and a conjunction of upgrades with regards to equipment upgrades that can be in the field through valves as well as rotating equipment, all of which Baker Hughes is in a position to provide today. Then you have about 35% of technology that is being demonstrated and in prototype today. So over 40% of your opportunity really exists with technology that's coming on stream now between now and 2040. And then you've got about a 40% requirement of new technologies that still haven't been developed. But there's a lot the industry can do today, and that's not incorporating the big opportunity around CCUS, around hydrogen, and developing energy mix that's changing.
You mentioned CCS there, and one of the things, carbon capture and storage, of course, one of the things we've seen in the US is a lot of these kind of new projects propose, attaching, carbon capture, facilities onto their plants as a way to reduce emissions. I mean, do you think that's kind of the future of this industry, is, stripping out carbon kind of along the value chain wherever it's possible?
It's interesting because it goes broader than what people may think at first. They think of the oil and gas industry as being the area of focus, but there's a lot of industrial segments such as cement, metals that actually have hard to abate areas. And so there's different processes from a carbon capture, utilization and storage that can be applied. At Baker Hughes, we have 3 processes already in development, one commercially available with the chilled ammonia process. Then you have mixed salt and also compact carbon capture. And we think that there's going to be an evolution of processes and technologies that apply to large scale, medium scale, small scale, really CCUS. And across the board, you've seen from the IEA study, today there's only 40 million tons that's actually captured and sequestered. As we go forward, we're going to need over 2.4 million tons of CO2 sequestered by 2040. And then that continues to increase as we go forward.
Shift the focus a little bit here. So we talked about kind of what's going on in the market right now, of course. And also, of course, what's coming up soon is the COP26 climate conference. I'm sure you will be, watching that closely. What are you going to be watching at that conference? And do you think it has the potential to shift kind of the energy investment landscape in kind of a meaningful way?
There needs to be a conversation which brings together all the different stakeholders and actually makes a plan that is pragmatic with regards to the global needs of energy security as well as sustainable energy and a path along the journey of net zero. And so when you think of carbon pricing, you think of regulatory framework, you think of financing, all of that needs to be discussed in the aspect of the continuing cost curve coming down of some of the new technologies, but also the adoption of technologies as well and having the right framework in place. So we're looking forward to COP26. We think it's an important event and also will be a coming together of some of the discussions that need to be held and also making it a realistic journey towards net zero.
You mentioned some of those kind of new generation of technologies. Obviously Baker Hughes is looking at a number of these. You guys have invested in various areas. What's kind of driving your bets on some things like energy storage or hydrogen or geothermal or whatever it may be. Kind of, when there's a lot going on at various stages of development, and it's all quite high risk at the moment. So, how are you deciding where to put your bets right now?
Well, Justin, the fortunate thing is, as Baker Hughes, we've been involved from an energy technology standpoint for decades. And when you look at CCS, we've been involved in projects for a number of decades in hydrogen. We've been involved in the compression since 1962. So they're not new areas, but what you're seeing is that they're key technologies to be able to achieve the net zero. So let's take CCUS to begin with. We see that there's an addressable market for our capabilities in CCUS of between $35 to $40 billion by the end of the decade. And when you think about the rotating equipment, the compression, the ability to actually measure, sense on a carbon capture, utilization and storage, as well as the reservoir, the ability to drill, understand the components, that's all capabilities in our portfolio today. So the big opportunity is, again, as the marketplace starts to expand, we've got the capabilities from a technology standpoint to go and address those customer needs, not just in oil and gas, but also across the other industrial segments that have hard to abate areas. Hydrogen, again, we see hydrogen being a fuel for the future. And it's been tried before, and we think that now the right elements are coming into place. When you think of blue hydrogen, you think of green hydrogen. And we see an addressable market for Baker Hughes, again, between the 25 to $30 billion by 2030. And again, here, we're already involved in two projects, one in Canada with Air Products with regards to blue hydrogen, and one in the Kingdom of Saudi Arabia, NEOM, with regards to green hydrogen. And we've got industrial gas turbines that can already run on 100% hydrogen. We've got high ratio pressure compressors that are going to be utilized, and then all the associated equipment as well that goes into understanding, measuring, sensing the hydrogen itself. So these are huge opportunities. And there's one thing that's very true. The world's going to need energy. And so we need to continue to invest in these new energy mixes. And we feel we're well positioned both in CCUS and hydrogen. As you look at energy storage, again, a bit longer term, but as you see the continued growth of renewables, energy storage is going to be key to enable that and also associate it with natural gas. And then geothermal, there's areas of the world that have been deploying geothermal. We see that increasing over time. And again, well positioned with the rotating equipment and also the oilfield services that we provide.
Yeah, it's interesting. You say these aren't new technologies, which, of course, you're right. Something like CCS has been around for a long time, but, it hasn't. I know, having covered this industry for 10 years or more, there have been previous cycles where, it looked like CCS, for instance, was, about to take off, and it's, it never quite happened in the way that people thought it would. Do you see a realistic breakthrough here for, I'll stick with CCS. Do you see a breakthrough moment here for CCS? And if so, what does it need? I think the issue has always been, a price on carbon or something, some sort of incentive like that. Do you see that, being put in place right now?
What's changed is obviously during the pandemic, it really brought to focus climate change and the discussion around the requirement to cut emissions, and where it's on the agenda for companies as well as governments really has increased to in the top 3 discussions that takes place. And I think that momentum is not going to change. And with that being the case, you've got the opportunity also of new technologies that bring down the cost curve as well. And if we look at our CCUS, I mentioned compact carbon capture. If you look at what people say the cost to capture carbon today is around $160, $180 per ton, we can bring that down, we think, by 50% as we go forward and develop these new technologies. So we think we're actually at the right time where the discussion is taking place. It's at the right level and it's not going to go away. And we've got the right advances in technologies. Now what we need is also the supporting ecosystem. And that really is governments, regulations, and companies working together. But with over 60% of the world's GDP now having committed to net zero, we think that, again, the train's left the station. And again, we're going to be part of it from a technology standpoint.
When you look at these new technologies, there are obviously new players. Are you kind of trying to, kind of forge new relationships, whereas maybe in the past you were working a lot with oil producers, Exxon, Chevrons of the world. Are you looking at, breaking into kind of new, new areas, forging relationships with new companies and kind of building up new, as you said, ecosystems of companies that can do these kind of projects?
Again, we describe Baker Hughes as an energy technology company. And recently also at a conference, we started to depict Baker Hughes across two business areas. One, which is more your traditional oilfield services and equipment area, which is going to see some tailwind as demand starts to recover and also the return following the pandemic. But then a higher growth area really for the long term is industrial energy technology. And there it's really applying CCUS, hydrogen, emissions management, not just to the oil and gas sector, but also across the industrial segments of metals, mining, cement. And as you think about really emission management and bringing down emissions, it's not a oil and gas challenge alone. It cuts across all industries. And so we've got an opportunity there to provide the technology that we have within oil and gas also to these other sectors. And that's why we've broken down the business really into addressing these two business areas that are growing at different rates. Both have tailwind in the short term, and then also industrial energy technology for the decades that follow.
So I guess that kind of leads on to this last kind of topic I wanted to discuss with you is, looking at Baker Hughes itself. You mentioned you have these kind of two different units looking at different technologies and different stages of growth and things like that. How are you managing that? Having one foot in the kind of traditional oilfield service business and kind of everything that's going on there, and having another foot in some of these kind of lower carbon technologies. I mean, are you guys able to manage that? Does that present kind of challenges for you guys?
It provides a great unique opportunity because from a portfolio perspective, we can actually go across the energy value chain and really assist in decarbonizing industrial segments as well as oil and gas. And so the way we look at it is really the allocation of capital and resources in what makes sense. And clearly with the industrial energy technology, that's a faster growth rate, more also into the future. There's more allocation of capital into some of the new technologies, and then continuing to support also our traditional key market, which is oilfield services, equipment, and the production that's going to be there. As I mentioned at the beginning, we don't see a scenario where hydrocarbons aren't relevant for the next few decades, and also it's going to be key to managing the different evolution of requirements from an energy perspective. So we like being in both areas and also having that portfolio differentiation, and we think it positions us uniquely in the industries.
With companies like Baker Hughes or even some of the big European IOCs who are trying to do kind of both oil and gas and renewables and other kinds of low carbon technologies, there's always this debate about should this all be done under the same roof, or does it make sense to kind of split these businesses apart? I mean, is that a debate that you have with some of your shareholders who might want only to be positioned in kind of faster growing low carbon businesses, or people who want access to the oil field services side? Maybe they don't want it mixed up in that way. Is that a discussion that you guys have?
It's a question that I addressed head on actually during the conference. And look, at this moment in time, we see that there's a lot of benefit to focusing on these two business areas together within Baker Hughes. A lot of the customers are the same. There's an opportunity from a sharing of research and development. There's a sharing of some of the also back offices. And so at this stage, it definitely makes sense. And it also provides optionality for the future. So I think, we'll continue to evolve and look at the situation. But at this time, definitely it makes sense to actually have and capture both growth opportunities. And as I mentioned at the beginning, there is growth both in the oilfield services and equipment and also in the industrial energy technology for the next few years.
On the oil side, on the traditional side, I mean, how do you see that market? How do you see the momentum in that market? Are you seeing some pretty good growth at this point on the oil and gas side? Obviously, prices have been higher. It seems like people are starting to invest a bit more there.
Yes, and on the oil side, again, we've mentioned that we are seeing over the course of the next few years a recovery in demand and going back to 2019 levels. So there is tailwind there. Obviously, the low-cost basins are the ones that will benefit the most. And as I mentioned on gas, we see it not only as a transition, but destination fuel. So definitely positive growth taking place in those marketplaces. And, we think that given the capability we have from a production and chemicals perspective, and also the focus we have internationally, we're well positioned to actually gain that tailwind, which is taking place right now.
All right. So, well, thank you, Lorenzo. We, of course, always appreciate your time. Any kind of final thoughts around, the energy transition and kind of what you're seeing in that world right now?
I'd end, Justin, just by saying I think it's an exciting time to be in this industry, and also the opportunity for Baker Hughes as an energy technology company really to have a purpose around providing safe, reliable, secure energy, and also being conscious towards the net zero. And what we want to enable is really the pathway towards net zero through technology for our customers in all the various segments, and also partner creating the ecosystems that are necessary. So it's an exciting time, and we look forward to the years ahead.
All right. Thank you, Lorenzo. Appreciate it. And everybody, please do stick around for our next session, which is are fossil fuels compatible with net zero? Certainly, we just heard Lorenzo's views on that. And this next conversation will be with Nick Walker, who is the president and CEO of London Energy. And he'll be in conversation with Alan Livesey, the Lex research editor here at the Financial Times.